everyone, I'm Michiyo Tower, a realtor in North Idaho. Welcome back to the channel. You have decided you want to buy your first home. You have started Browzillo. You're dreaming about the paint colors. But then a big, scary question pops into your head. How much cash do I actually need to have in the bank? Today, we are tackling one of the biggest hurdles and sources of confusion for first-time home buyers, the upfront costs. We are going to demystify the two major cash components you will need, your down payment and your closing costs. So, get ready to take some notes because by the end of this video, you will have a crystal clear understanding of how much money you really need to save to make your dream of homeownership a reality. Let's get into it.
Hey, welcome. Today we're diving into what might be the single biggest thing holding people back from buying a home, the cash. You know, the down payment and all those other costs. We're going to break it all down and give you a super clear picture of what you really need.
So, let's just get right to it. The big question, right? How much money do you actually need in the bank to buy a house? It's a huge source of stress for so many people, mostly because you hear a million different things from a million different places.
And I'm willing to bet you've heard this one probably 1,000 times. It's that old, dusty rule that gets repeated over and over again. And honestly, it's the one thing that stops so many people dead in their tracks, they don't even bother to start looking. But what if I told you that rule's just, well, it's totally out of date?
All right, let's get into it. We're going to tackle this 20% down payment myth head on. Bust it wide open. It's time to separate fact from fiction so you can see what's really possible.
Okay, first things first, let's make sure we're all on the same page. A down payment? It's just the part of the home's price you pay yourself, in cash, right at the beginning. The rest, you get a loan for. It's pretty straightforward. But the real question, the one we're here to answer, is how big does that first chunk of cash actually have to be? And here it is. This is probably the most important thing you're going to hear today. That 20% rule, it's a myth. It's just not true anymore. Let me say that again because it's so important. You do not need to have a 20% down payment to buy a house today. Seriously, just knowing this one fact can open up a world of possibilities.
So if it's not 20%, then what is it? Well, the great news is there are a bunch of awesome loan programs out there specifically designed to help with this. We're talking about things like FHA loans, conventional 97 loans, and even these amazing zero-down options like VA and USDA loans for people who qualify.
Look at this number, 3.5%. That's the minimum down payment for an FHA loan, which is, by the way, one of the go-to options for first-time homebuyers. Why? Because they're often more flexible on things like credit scores, which just makes getting into a home a whole lot more achievable for a lot more people.
And believe it or not, it can get even better. For veterans and service members who qualify for a VA loan, or for folks buying in certain rural or suburban areas with a USDA loan, the minimum down payment is $0. Yep, nothing. Zilch. It's an absolutely incredible benefit and a powerful way to get into a home.
Okay, so you're probably thinking, all right, what's the catch? And that's a fair question. The catch, if you want to call it that, is usually something called PMI, or private mortgage insurance. But here's the key. Don't think of it as a punishment for not having 20%. Think of it as the key that unlocks the door. It's the thing that makes these low down payment loans possible in the first place. It's a strategic cost that could let you become a homeowner years, and I mean years, sooner.
All right, so we've busted the down payment myth, you're feeling good, but hang on a second. There's another piece to this puzzle. We got to talk about closing costs. This is that other big expense that frankly catches so many first-time buyers completely off guard.
So how much are we talking about here? A really solid rule of thumb is to budget somewhere between 2 to 5% of the home's purchase price. And what is that money for? Basically, it covers all the fees for all the people and services that have to get involved to make the sale official. The paperwork, the legal stuff, the whole shebang.
Now, I know this looks like a long, maybe even kind of scary list, but don't get overwhelmed. It's really just the breakdown of all those fees we just talked about. Like title insurance, that's super important. It protects you in case someone from the past pops up and says they have a claim to your new house. No thanks. And prepaids, that's just you getting a head start on paying things you'd have to pay anyway, like property taxes and homeowners insurance.
Okay, enough with the percentages and the definitions. Let's do some actual math. This is where the rubber meets the road. We're going to use a real-world example on a pretty typical house price, because when you see the actual dollar amounts, that's when it all really starts to sink in.
Okay, let's look at a $350,000 home. We'll estimate closing costs at about 3%. With an FHA loan at 3.5% down, you're looking at a total of about $23,000 cash. With a conventional 97 loan at 3% down, it's even a little less, around $21,000. Now, look at the old 20% down rule. For the same house, you'd need, get this, over $80,000 in cash. The difference is just,
I mean, this chart really says it all, doesn't it? Just look at how that 20% down bar completely dwarfs the other two. It's not even close. This is what we mean when we say homeownership is so much more attainable than you might think. We're talking about a difference of tens of thousands of dollars. So we've already seen that the cash you need is way, way less than the old myth suggests. But what if I told you we could get that number even lower? Yeah, there's some really smart strategies you can use to shrink that cash to close figure even more.
Okay, these are total game changers. First, down payment assistance, or DPA. These are programs, often local, that literally give you grants or low-interest loans to help with your down payment and closing costs. You have to look into these. Second, you can actually ask the seller to chip in and pay for some of your closing costs. It's called a seller concession, and it's a common part of negotiating. And third, yep, gift funds from family are totally allowed for most of these loans.
phew. Okay, we have covered a lot of ground here. We busted some major myths, we crunched the numbers. Now let's wrap it all up and put it into a clear, simple path forward for you.
So here it is, your action plan. Step 1, just forget the 20% myth. Seriously, start exploring these 0 to 3.5% down loans. Step 2, remember to budget for those closing costs, that extra 2 to 5% so there are no surprises. Step 3, do a little digging. Research down payment assistance and other programs right where you live. And step 4, and this is the big one, talk to a good loan officer. They do this all day, every day, and they can lay out all of your specific personalized options. Look, saving up to buy a house can feel like this impossibly long race. But hopefully, you see now that with the right strategy and the right information, that finish line, it's so much closer than you thought. It's actually within reach. So the only real question left is, what's your first step going to be?